Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. Today, we're diving into a report from the TORO company. No, not the energy drink, the lawnmower people. I bet you didn't expect lawnmower people. I bet you didn't expect lawnmowers to get this interesting. We're looking at what's called an 8K filing, a kind of quick update a company sends to the Securities and Exchange Commission, or SEC, when something important happens. The main point here is their annual meeting of shareholders, which happened on March 18, 2025. Let's see what got voted on and how those votes turned out. First up, the election of directors, the people who sit on the board and help guide the company. Shareholders got to vote on who they want to be in charge. Jeffrey Harmoning received almost 77 million votes for him, while about 10 million votes were withheld. Joyce Mullen got a similar result, about 76 million votes for and almost 14 million votes withheld. This means that these director nominees were all approved. Then we have Richard Olson, who got about 83 million votes for and about 3.5 million withheld. All these people were voted in to lead the company. Next, shareholders voted to ratify the selection of KPMG LL as the company's independent accounting firm for the fiscal year ending in October 2025. Basically, they're voting to approve the company's choice of who checks their books. Almost 90 million voted for, about 3.4 million voted against and about 133,000 abstained, which is like saying no comment. So KPMG is in. Finally, there was a vote on executive compensation, how much the top bosses get paid. This vote is advisory, meaning the company doesn't have to follow it, but it's a good way to gauge shareholder sentiment. About 80 million voted for approving the compensation packages. However, around 6 million voted against and 800,000 abstained. This shows a bit of disagreement on how much the executives are making. The report also tells us who else is on the board of directors. Diane Craig, Eric Consosha, and Christian Cork will keep serving until the 26th meeting. Gary Ellis, Jill Pemberton, and Richard Olson will continue until the 2027 meeting. The company's shareholders gave a thumbs up on an advisory basis to how much money the top people at TORO made, which was made public in their report about executive pay as requested by the Securities and Exchange Commission. There's also an exhibit that includes the interactive data file. Think of it as the raw data behind the report used for analysis. It is just there if anyone wants to do a deeper dive, but for now we will not. Now let's step back and see what this all means. The TORO company seems to have a stable leadership team, with shareholders generally approving the board and the choice of accounting firm. However, the vote on executive compensation shows some friction. While the 4 votes won, the significant number of against votes suggests that some shareholders think the top executives are being paid too much, or that the company could allocate resources differently. It's important to remember that this is just one snapshot in time. We need to look at past filings, industry trends, and the company's overall financial performance to get a complete picture. But based on this 8K, the TORO company seems to be navigating its corporate governance pretty smoothly, though the executive pay issue could be something to watch in the future. Overall, the TORO company seems to be on a steady course. Strong shareholder support for directors in the accounting firm indicates confidence in the company's management and financial practices. The dissent over executive compensation suggests some investors feel the balance between executive pay and company performance needs re-evaluation. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.